Welcome to Market Updates HQ, your command center for navigating today's volatile markets. Every week we break down what's really happening in macro, crypto, Bitcoin, AI, and the commodity forces that matter most to your financial future. The stuff that mainstream finance is afraid to cover because it's too uncomfortable, too contrarian, or too real. If you want to understand what's actually happening with your money, before everyone else catches on, hit subscribe. We bring out new episodes every week. No fluff, no hype, just signal. Let's get into today's episode. Stop. If you think Bitcoin is an inflation hedge, I need you to hear me out. Because you might be right about the destination, but completely wrong about the reason. And getting the reason wrong could cost you a fortune over the next decade. Every single day on social media, on financial news, on YouTube, you hear the same story. Governments are printing money. Inflation is eating your savings. Bitcoin is digital gold. It protects you from rising prices. Buy Bitcoin to hedge against inflation. And I understand why people believe that. We have lived through unprecedented money printing since 2020. Inflation hit 40-year highs. The US national debt blew past $35 trillion. The logic seems obvious. Governments print money. Prices go up. Bitcoin is scarce. Therefore, Bitcoin goes up. But here's the problem with that narrative. It does not actually match the data. Bitcoin did not go up during the worst inflation we have seen in a generation. When the US Consumer Price Index was running at 9% in June 2022, Bitcoin was crashing from $69,000 all the way down to $17,000. That is not what an inflation hedge does. Gold went up during that period. Bitcoin did not. And if you look at the historical correlation, Bitcoin's price movements do not actually track inflation. They track something else entirely. They track liquidity, specifically global money supply and risk appetite. When central banks are easing and liquidity is flowing, Bitcoin goes up. When they tighten, Bitcoin goes down. That is not an inflation hedge. That is a liquidity barometer. So if Bitcoin is not primarily an inflation hedge, what is the real bull case? What is the reason Bitcoin could reach 500,000, a million, or even higher over the next decade? The answer is deflation, and the source of that deflation is the most powerful economic force the world has ever seen: artificial intelligence. That is what this video is about, and by the end of it, I think you will see Bitcoin completely differently than you do right now. Let me explain what I mean by AI deflation. And I'm going to give you the framework that some of the smartest macro investors in the world are using right now. Raoul, the founder of Real Vision, called AI a deflationary nuclear bomb. Think about what AI actually does. At its core, AI takes tasks that used to require human time, human expertise, and human cost, and it makes them faster, cheaper, and in many cases, completely free. Customer service that used to require a call center, an AI agent handles it for pennies. Legal document review, AI does it in seconds. Code that took 3 months, AI tools are doing it in hours. Every single one of these is being compressed from expensive and slow to cheap and instant. The CEO of Anthropic said that 50% of white-collar work will be automated within 1 to 5 years. Now think about what happens to prices when the cost of producing something collapses. They fall. That is deflation, not the scary kind, the technology kind. A computer that cost $1 million now fits in your pocket. The same thing happened with information. An encyclopedia that cost thousands is now free online. The same thing happened with communication. A phone call that cost £1 a minute is now free. AI is about to do this to everything. Every service, every knowledge task, the cost is going to collapse. And here is the critical insight. When the cost of producing things falls, the value of producing those things also falls. If AI can write code, the value of a human coder drops. Software companies charging monthly subscriptions, their revenue is going to fall. The software ETF versus the NASDAQ has already had its worst relative crash on record. So here's the question. In a world where AI makes everything abundant and cheap, what goes up? What becomes more valuable in a world of deflation? The answer is simple: scarcity. In a deflationary world, the assets that appreciate are the ones that cannot be replicated, cannot be printed, and cannot be made abundant by technology. Assets that are genuinely scarce. There are two categories of things in the economy: abundant things and scarce things. Technology makes abundant things cheaper, but technology cannot make scarce things less scarce. Look at what is already happening in markets. Software is down 18.5% year to date. Energy is up 19%. Materials are breaking out. The rotation from abundance to scarcity is already happening. 108,000 job cuts in January alone, a 17-year high. The labor market is already beginning to feel the deflationary pressure of AI automation. Silver, genuinely scarce. No substitute for its role in AI hardware. Copper, genuinely scarce. Every data center and AI robot needs copper. China is stockpiling it. And Bitcoin. the scarcest asset ever created. There will only ever be 21 million. That number is mathematically guaranteed. No government can change it. No central bank can print more. With gold, we estimate 200,000 tons, but we do not know for certain. With Bitcoin, zero ambiguity. 21 million, forever, verifiable by anyone. This is revolutionary. AI deflation triggers a chain of events that makes Bitcoin essential. The entire global economy runs on debt, but AI is about to remove a massive chunk of the workforce. The debt-AI paradox. Something has to give, and I will tell you what gives. The money printer. When governments face a deflation crisis, they print money, except this time, the money printing will not be temporary, it will be permanent. Because AI deflation is a permanent structural force, the deflationary pressure never stops, which means the money printing to counteract it never stops either. $9 trillion of debt needs to be rolled over this year. So you get a world where costs fall because of AI, but the money supply expands because governments are fighting deflation. Where does that money go? It flows into scarce assets, hard assets, Bitcoin. This is why leading macro investors are framing Bitcoin as the ultimate deflation trade. Bitcoin absorbs the excess liquidity created to fight the deflation they cannot stop. Almost nobody is talking about this yet. The market is already telling you the deflation thesis is real. Software stocks are collapsing relative to the broader market. The worst relative crash ever recorded. That is the market pricing in AI deflation right now. Meanwhile, scarce physical assets are surging. US manufacturing just posted its biggest jump since 1995. DRAM prices up 500%. This is the physical AI build-out accelerating. Money flowing into infrastructure. Bitcoin has been holding firm while software stocks get destroyed. It is starting to decouple from software stocks. As that correlation breaks and Bitcoin trades as a scarce asset, that is the catalyst. Goldman Sachs quietly revealed over $1.1 billion of Bitcoin exposure. JP Morgan is advising allocations. Stablecoin volume hit 10 trillion. The infrastructure is scaling rapidly. What does this mean for you? First, understand the narrative shift. The inflation hedge narrative is fading. The deflation narrative is structurally more powerful. Understanding why you hold changes your conviction. Second, think in terms of scarcity versus abundance. Can AI make this more abundant? If yes, be careful. Software, labor, knowledge work, all becoming abundant. Bitcoin, silver, copper, genuine supply constraints. Third, watch the Bitcoin to software correlation. Fourth, understand that the money printing is coming regardless. They will print, and that money will flow disproportionately into scarce assets. Be positioned early. Fifth, use AI yourself. Experience AI deflation personally to build conviction. Sixth, be patient. This plays out over 5 to 10 years. You are early. The thesis compounds over time. And here is the practical starting point. Know your specific number. How much Bitcoin do you actually need for financial freedom? Go to Market Updates HQ's Bitcoin retirement calculator at marketupdateshq.com. Put in your details and see precisely what your retirement target looks like. Most discover the number is closer than expected. Run your number and come back every week for this macro intelligence. Every major technological revolution has produced deflation. The printing press, the internet, each made things abundant. AI is the biggest revolution in human history. It will produce more deflation than any generation has ever seen. In that world, an asset with mathematically guaranteed scarcity, verified by a global decentralized network, held in self-custody beyond the reach of any government, that is not just a good investment. That might be the most important asset of the 21st century. Drop a comment below. Inflation hedge or deflation trade? That's it for today's updates. I'll see you in the next one. Thank you for joining us at Market Updates HQ. If this analysis was valuable to you, consider liking this video and subscribing to our channel so that you never miss an update. Staying ahead in these volatile times requires accurate information, and we're committed to providing you with just that before you make your next financial decision. Also, we'd love to hear from you. Leave a comment below on which markets you're tracking and what topics you'd like us to cover next. Stay informed, stay focused, and we'll see you in the next update.